Hello, we are team number 2 presenting our integrative project business plan for the production of wheat flour for the company Molinos, Especias, and Pinole Don Gil. Our team is integrated by Daniel Avalos, Karime Bañuelos, Cesar Barraza, Sebastián Duarte, Christian Rodriguez, and myself, Jose Gonzalez.
Okay, so we're going to start first with the initial investment and the fixed assets. These assets of the company, whether tangible or intangible, are necessary for the production area, but we have to keep in mind that they are not necessary for the sales area. The following are the machinery and equipment, which is the silo, the cleaning machine, the machine to wet the wheat, and the planchiste. We also have the computer equipment, which is the Lenovo, and the printer, that altogether give us a total of 75,338 pesos. Next, we have the deferred assets. These resources go hand by hand, and with these assets and our payment commitments in the short term, the following are the installation costs, which is 10,000, and the advertising, which is 8,053.92 pesos. That together give us a sum of 18,053.92 pesos. We have the working capital, which is an accounting quantity referring to those economic resources that a company has within its assets. The following are the sale expenses and administrative expenses, which together give us 34,240.48 pesos. And we have the total sales of the year one, which is 452,485.30 pesos. We also have the raw material, which is the wheat, and which is 15,351.74 pesos. And the total current assets give us a total amount of 577.52 thousand pesos.
And then we have here the production cost. This budget is divided in 4 categories. The first one is the raw material. I think is the most important point because it is what we are going to use in the production. As you can see, the company is going to use wheat, and they are going to use water, but it is related with other chart. As you can see, it is in kilograms. We have the consumption per month, the cost, the total consumption per year. As a total, we have the total per year of more than 2,500,000 Mexican pesos. And then we have here the packaging. It is another important point because the packaging is going to protect the product. As you can see, in this case, the company is going to use raffia bags. The company is going to use 750 bags with that cost that you can see, with a total of 18,150 pesos. And then we have the labor. It is important because those are the people that are in charge to the production. First, we have the direct labor. In this case, we have the miller and the packaging manager. We have the salary. As a social security, the company is going to use the 20%. And we have the total of more than 10,000 Mexican pesos. And then we have here the indirect labor. We have the CEO. It is the person that is going to check that all the process are well done. We have the salary, the same social security, and the total of 18,000 Mexican pesos.
Next, we have the administrative expenses, which are those that are not involved neither in the sales area or the production ones. The following are the salaries of administrative personnel. We have the accountant, the administrative manager, and the secretary, which give us a sum of 21,000 pesos per month. We have benefits and social security of 2,625 pesos. We also have the other administrative expenses, which are the stationery, the light, and the water, which monthly give us a total amount of 6,095.49 pesos.
Moving on to our selling expenses. As selling expenses, they are associated with the selling of the good or making the sale. These sales don't necessarily affect the making of the product. Now we will move on to our table that explains our selling expenses. First things first, we have our floors and sales staff salaries. As you can see, our table is divided into 5 sections, beginning with the category, followed by the daily salary, the number of employees, the weekly total, and the monthly total. As floor and sales staff, we have the cashier and the driver, adding to a total of 8,800 pesos. After loans and social security, that brings a total of 1,760 pesos, making the total for floors and sales staff to 10,560 pesos. Other selling costs, it is important to know that other selling costs may change according to by outside factors from your company. They are not always the same. For example, our company right now finds itself under a pandemic, so we had to add mouth covers and antibacterial gel as other selling costs, which were not used before. Also, our selling cost table is divided by category, followed by the units, the monthly consumption, the annual consumption, the unitary cost, and the monthly cost, bringing our total for other selling costs to 265 pesos and 25 cents. After adding that to our previous total from floor and sales staff, bringing our overall total to 10,825 pesos and 25 cents for other selling costs. Now, the total result of the cost involved in the production of wheat flour. As you can see on our table, we have the concepts followed by the monthly amount. We begin with our production costs, followed by our raw material, packaging and packing, direct workforce, indirect workforce, manufacturing indirect expenses, selling expenses, administrative expenses, financial expenses, which brings us to a total cost of 287,292 and 26 pesos, with a monthly production of 750 sacks, followed by our unitary total cost of 383, our unitary sales price of 402, our monthly cost production of 287,292, and an annual production cost of 3,447,507 pesos, with a unitary variable cost of 305 pesos and 79 cents. Now moving on to our cash flow, which it refers to the inflows and outflows of cash. Also, in the table, you can see the liquidity the assets have gathered over time. Here you can see our table, it is divided into 5 years, beginning with the earnings, which is the sales, the rescue value, which will give you the total earnings, followed by the expenses, the fixed costs, variable costs, to get a total cost for the expenses. Then we have the depreciation and amortization, followed by the initial investment. As you can see in year 0, the earnings, expenses, and depreciation are at 0 because none of those were active as it was year 0. But following the years up to year 5, you can see that the net cash flow incremented from 394,938 pesos to 269,157 and 46 pesos. Now, the debt amortization table is a support system for the entrepreneurs. And this table shows the payment schedules for example, the interest total, the repayment date, and the debt remaining in each period. Here we have our table beginning with the total capital, the number of payments done yearly, which is 4, the interest rate, which is 12, and the bottom table begins with the payment number, the interest, the amortization total, which will be deducted each year, the total of that payment, and the remaining capital. If you follow down to year 4, you can see the remaining capital is 0, which is when the last payment should be made.
Okay, I'll continue by describing what a basic financial statement is. Along the way, we are going to break it down into projected started results and general balance. Okay, projected started results is one way to calculate our projected utility. So basically, we are going to need 2 concepts, our income and our cost and expenses. Okay, to illustrate this example, we got this chart and we got our income for the year one, which is 3,619,000 as an income. So basically, we are going to take away some concepts such production costs to get our gross profit. But we also need to take away the selling expenses and administrative expenses to get the operation profit. So since we are working in the Mexican system, we have to consider the taxes. So the utility for the year one is going to be 112,043. So this is an exercise that is going to be carried out over a period of 5 years. Okay, well, now moving on to the general balance, we got the following concepts: assets, liabilities, and equity. So this is a general balance that reflects how we are doing with our finances. Basically, it reflects our health in the finance aspect. As you can see, we got our assets and our liabilities. So as a result, in both sides are sharing the same amount of money. For example, we got 500 595,000 for assets, and we also have the same amount for our liability plus capital.
Okay, now we talk about the financial projections and the project evaluation. First is the net present value or net present value method. Um, the net present value of time of series is cash flows, but in bond and own bond, and is defined as the sum of the present value of the individual cash flows uh, in the event that all the future cash flows are input and the only way out of money in cash is the purchase price. The net present value is simple the present value of to project the cash flows minus the price of the purchase, which is the present value. The result of the net present value for this company is the result of the subtraction of the total MP of the total income minus the total expenses, that is 11,772,460.54 minus 10,761,626.48. That this is equal to for 361,752.71 Mexican pesos. This result confirmed that the net present value is correct since the income is greater than the expenses. The next is internal rate of return. The internal rate of return is the rate of the interest um, that offers the investment, and it is the percentage of the profit or loss that will be an investment for the quantities that have not drawn the project. The company Molinos Especies and Pinoles Don Gil has a 178.32 percentage of the internal rate of return, which is the limit of the percentage that a profitable company. This calculation will be based on the initial investment and accompanied by a series of positive cash flows.
Okay, the company will acquire a loan from Santander Bank that will be an 80,352 pesos. with an interest rate of 12% with a duration of 4 years. The revenue budget is projected for 5 years. Um, the average number of bags that the company has to sell is 750, and the months of the year to obtain the full year. In addition, there is a profit margin of 5%, and it is the way in which sales are increasing each year. The break-even point means the percentage of sales that must be performed per year to not miss. It is the minimum in sales that must be performed to not lose. Over those values, meaning good profits. In the first year, the company has to sell the 80%, and the company is going to break even. The cost-benefit analysis is a financial tool to measure the relationship between the costs and benefits associated with an investment project in order to assess their profitability. Being understood the investment, not just at creation of new business project, but also an investments that can be made in a business underway, such as the development of a new product of acquisition of machinery. This amount is obtained by dividing the total income between the total expenses of the company. The result that truth must never be less than 1. If its result is less than 1, the company or business is not profitable. The company has a 1.09 of cost benefit, a thorough result that shows that the company is profitable.
And then the financial plan, the money is very important in this point, talking about the investment. And it is very, very important because it is if the company can finance the project or they are going to use a loan from the bank. So in this case, the company needs to use some money in machinery, equipment, and advertising, so they need the loan. It is from the Bank Santander and it has a rate of 12%. We have those characteristics. The amount, as you can see there, determined 4 years. The warranties, at least you need a solidary obligation, and the rate is 12%. Those are some documents to hide the loan or some requirements: the credit request, the constitutive act of your company, power of legal representative. You need some numbers of your accounting, or the tax identification card, the RFC here in Mexico. And here we have the investment, the rate, and the years. As you can see, the interest, the payments, and the debt after the payment. And in the year 4, the payment, the amount is going to be 0.